In the last 52 years, silver has only done this 3 times, and right now, in 2026. What I am about to show you is so rare that most analysts will never witness it twice in their careers. I have spent the last 3 weeks buried in historical data, comparing charts from 5 decades ago to what is unfolding right now, and what I found sent chills down my spine, because silver just repeated the 1979 pattern exactly, not similar, not close, exactly. The same percentage moves, the same time frames, the same market structure, the same investor psychology. And if you understand what happened after 1979, you will understand why the next 60 days could be the most important period for silver investors in the last 45 years. Here is the truth that most people do not want to hear. After the 1979 pattern completed, 2 things happened. First, silver pumped another 35 to 40% in 1 month. Investors made fortunes. The headlines screamed about silver going to the moon. Everyone was a genius. Then it crashed, not a pullback, a complete collapse. That crash created a top that lasted 45 years, almost half a century. People who bought at the top waited their entire adult lives and never saw those prices again. Now ask yourself this question. Are we about to repeat that exact sequence? Is February 2026 going to mirror January 1980? Are you prepared for both the potential pump and the devastating crash that could follow? Most people watching silver right now have no idea this pattern exists. They see price going up, they get excited, they buy. They have no historical context for what happens when silver moves like this. But you are different, because by the end of this video, you will understand exactly what is happening. You will know the precise levels to watch. You will have a plan for every scenario. And that knowledge could be the difference between generational wealth and a lesson you never forget. Welcome to Finance Currency. If you are new here, I break down complex market patterns into analysis you can actually use. No hype. No hopium. No fake gurus telling you to buy everything. Just data, history, and honest analysis. Subscribe right now and hit that notification bell because the follow-up to this video will be critical. I will be tracking this pattern in real time over the coming weeks. You do not want to miss those updates, and if this analysis helps you, smash that like button. It takes 1 second and it helps more than you know. Now let me show you exactly what is happening. Silver just gained 65% in a single month. Stop and think about that number for a moment. 65% in 30 days. That is not normal. That is not regular market behavior. That is not what silver does in typical conditions. In the last 52 years of silver trading history, this has only happened 2 times before. February 1974 and December 1979. That is it. 2 times in over 5 decades. And now we have the third. This is what we call a parabolic move. And understanding what parabolic moves are is absolutely critical for what comes next. A parabolic move is when price stops moving normally. Instead of the usual up and down action, instead of pullbacks and consolidation, the chart goes vertical. It looks like a rocket ship launching. Buyers overwhelm sellers so completely that price just keeps climbing day after day with almost no meaningful corrections. The chart literally curves upward like a parabola, hence the name. Now here is what you must understand about parabolic moves. They are exciting, extremely exciting. You check your portfolio and it is up. You check again and it is up more. Every day feels like a gift. Social media is full of people celebrating. The financial news cannot stop talking about it. Parabolic moves create massive wealth for people who got in early. They make headlines. They create FOMO. Your neighbor starts talking about silver. Your coworker mentions they just bought some. Everyone wants in. But parabolic moves are also dangerous, extremely dangerous. Because here's the thing about rockets. They do not stay in the air forever. At some point, gravity wins. At some point, the fuel runs out. At some point, what goes up must come down. And when parabolic moves end, they do not end gracefully. They do not give you a polite warning and a chance to exit. They end violently. They end suddenly. They end in a way that traps everyone who thought the party would last forever. This is why understanding what happened the previous 2 times is not just interesting. It is essential. It is the difference between being prepared and being a victim. History has already shown us what happens after silver gains 65% in a month. It has shown us 2 different outcomes, 2 different paths. And right now, we are standing at the same crossroads where those paths diverge. One path leads to another month of massive gains, followed by a crash that creates a multi-decade top. The other path leads to years of sideways consolidation before the next major move. Same setup, same 65% monthly gain, completely different outcomes. So which path are we on? That is exactly what I'm going to break down for you. First, I will take you through the 1979 scenario in complete detail. Then I will show you the 1974 scenario. Then I will explain which one I believe we are more likely to experience and why. But I want to be clear about something before we continue. I am not here to tell you what to do. I am not here to say buy now or sell everything. That is not my role. Markets are unpredictable. Anyone who claims to know exactly what will happen is lying to you. What I am here to do is educate you. give you the historical context, show you the patterns, help you understand the probabilities, so that whatever decision you make, it is an informed decision, not an emotional one. Because your emotions are the enemy in markets like this. Your fear pumps the market. Your greed crashes it. Remember that line. It might save your financial life. Now let me take you back to December 1979 and show you exactly what happened when silver last moved like this. December 1979 is one of the most studied months in commodity trading history. What happened during those 30 days and the weeks that followed has been analyzed in countless books, academic papers, and trading courses. And for good reason. Because December 1979 shows exactly what can happen when silver goes parabolic, both the incredible upside and the devastating downside. Let me set the scene for you. America was in crisis, inflation was running at double digits, the dollar was losing purchasing power every month, people watched their savings evaporate in real time. Faith in the financial system was collapsing. Silver had been rallying for months. Smart money had been accumulating quietly. The fundamentals looked strong. Industrial demand was rising, investment demand was exploding, and then there were the Hunt brothers. Nelson Bunker Hunt and William Herbert Hunt were Texas billionaires who believed silver was dramatically undervalued. They had been buying silver for years, physical silver, silver futures, silver mining stocks, everything related to silver they could get their hands on. At their peak, the Hunt brothers controlled an estimated 100 million ounces of silver. To put that in perspective, that was roughly 1/3 of the entire world's deliverable supply. They were not just bullish on silver. They were all in. And in December 1979, their thesis seemed to be proving correct. Silver gained exactly 65% in that single month, the same percentage that silver just gained in January 2026. Let me say that again because it is important. December 1979, 65% monthly gain. January 2026, 65% monthly gain. The same number, not similar, not approximately, the same. The charts went parabolic. Every day was a new all-time high. The mainstream media started covering silver obsessively. Magazine covers featured silver. News anchors who had never mentioned precious metals before were suddenly experts. Your cab driver had an opinion on silver. Your dentist was buying silver. Your grandmother asked you about silver at Thanksgiving. Everyone was bullish. Everyone thought it was going higher. There was this collective delusion that the old rules did not apply anymore. Silver was going to 100. Silver was going to 200. The sky was the limit. Now, I know what some of you are thinking. That was the Hunt brothers. That situation was manipulation. Today is different. The circumstances are unique. You cannot compare 1979 to 2026. I hear this argument. I understand it. And I respectfully disagree. Yes, the specific players were different. Yes, the exact mechanisms were different. Yes, the scale of intervention was different. But here's what has not changed in 45 years. Human psychology. Greed feels exactly the same in 2026 as it felt in 1979. Fear feels exactly the same. FOMO feels exactly the same. The excitement of watching your investment go up every day feels exactly the same. Markets move on human emotion. They always have. They always will. And human emotion does not change. The technology changes. The players change. The specific circumstances change. The pattern remains. So what happened after December 1979? This is where it gets really interesting and really scary. January 1980 happened. After gaining 65% in December, silver did not stop. It kept going. It accelerated. January 1980 saw another 35 to 40% gain on top of that December rally. Back-to-back months of insane gains, 65%, then another 35 to 40%. People who had bought in November were up over 100% in 8 weeks. Silver peaked at approximately $50 per ounce on January 21st, 1980. That day marked the exact top. Think about the psychology at that moment. You have made more money in 2 months than most people make in years. The news is all positive. Experts are calling for higher prices. Everyone you know is talking about silver. Selling seems insane. Why would you sell when it is still going up? And then it crashed. Not a correction, not a pullback, a complete and total collapse. In the following weeks, silver dropped by more than 50%. In the following months, it dropped even further. The speed of the decline was breathtaking. There was no time to react. There were no warning signs that seemed obvious in the moment. People who had bought at the top were wiped out. Leveraged traders got margin calls they could not meet. Fortunes that had been built over years evaporated in days. The crash was so severe that the government had to intervene. They changed the rules on commodities trading. They implemented position limits. The COMEX exchange raised margin requirements multiple times to cool down the market. The Hunt brothers, those Texas billionaires who had been right about silver for years, eventually went bankrupt. Their net worth went from billions to nothing. They became a cautionary tale studied in business schools around the world. And here's the part that should terrify you. That $50 high from January 21st, 1980 stood as the all-time record for 45 years. 45 years. Think about that. If you bought silver at the top in January 1980 and held it, you would have waited your entire adult life without ever breaking even. You would have watched every other asset class go up while your silver position just sat there underwater, a constant reminder of the one time you let greed override logic. Silver came close to breaking $50 in 2011. It reached about $49, but it could not break through. That $50 level was not just a price. It was a psychological barrier burned into the collective memory of every investor who remembered 1980. That resistance held for 14 more years after 2011. It was only broken recently in this current rally. So let me summarize the 1979 scenario. 65% monthly gain in December, followed by another 35 to 40% gain in January. Euphoria at the top, everyone bullish. Then a devastating crash that created a ceiling lasting 45 years. Now let me ask you a question. If January 2026 is our December 1979, what does that make February 2026? And if February 2026 mirrors January 1980, where does silver go from here? The math is simple, and the answer should make you very alert. Before I show you the current price projections, I need to tell you about the second scenario, because 1979 is not the only time silver gained 65% in a month, and the other occurrence had a completely different outcome, February 1974. The macro backdrop had some similarities to 1979. Silver was in a strong bull market. Inflation concerns were rising. The dollar was under pressure after Nixon ended the gold standard in 1971. Investors were looking for protection against currency debasement. In February 1974, silver gained 65% in a single month, the exact same percentage as December 1979, the exact same percentage as January 2026. Everyone expected continuation. The setup looked nearly identical to what would later happen in 1979. Bulls were calling for much higher prices. The chart had gone parabolic. Momentum was unstoppable. But what happened next was completely different. There was no 35 to 40% follow-through month. There was no blow-off top. There was no spectacular crash. Instead, something more frustrating happened. Something that tests investors in a different way. Silver entered a long consolidation period. For the next 5 years, silver essentially went sideways. It traded in a range, up a little, down a little, never making meaningful new highs, never giving the continuation everyone expected. 5 years of nothing. Let that sink in. 5 years. 5 years of frustration, 5 years of sideways chop, 5 years of watching other assets go up while your silver position just sat there doing nothing, 5 years of doubt, 5 years of questioning your thesis. Many investors gave up during this period. They sold their positions out of boredom, out of frustration, out of needing the money for other things, out of losing faith that silver would ever move again. The financial media stopped covering silver. The excitement faded. People moved on to other investments. Silver became boring. Nobody cared anymore. And then in the late 1970s, silver finally broke out of that consolidation. And when it broke out, it went absolutely vertical. That breakout led directly to the 1979 to 1980 blow-off top we just discussed. So the people who held through 5 years of nothing were eventually rewarded massively. They participated in one of the greatest commodity rallies in history. But it required patience that most humans simply do not possess. It required conviction when there was no positive reinforcement. It required holding when everyone else had given up. Same setup. Same 65% monthly gain. Completely different outcome. One led to an immediate blow-off, top, and devastating crash. One led to 5 years of consolidation followed by an eventual move higher. This is what makes the current moment so critical. We have seen this exact setup 2 times before. Each time the outcome was dramatically different. And right now, in early 2026, we are living through the third occurrence. So which one are we going to get, 1979 or 1974? This is the question worth millions of dollars. Literally. Your answer to this question and how you position yourself could define your financial outcome for years. Let me share my analysis. I believe we are more likely to see the 1979 outcome than the 1974 outcome. Here is my reasoning. First, the velocity of this move is more similar to 1979. The speed at which silver has rallied, the angle of the chart, the lack of meaningful pullbacks. It matches the 1979 pattern much more closely than 1974. Second, the level of retail participation is more similar to 1979. Social media is full of silver discussion. New investors are piling in. There is a FOMO atmosphere that reminds me of historical blow-off tops. Third, the macro backdrop is more similar to 1979. We have inflation concerns, we have dollar weakness, we have geopolitical uncertainty, we have loss of faith in traditional financial systems. These conditions match 1979 more than they match 1974. But I could be wrong. Markets have a way of humbling everyone who thinks they have it figured out. I have been wrong before. I will be wrong again. This is not financial advice. This is analysis based on historical patterns that may or may not repeat. What I am more confident about is the specific levels to watch. Let us do the math together. Silver is currently trading around $110 after the recent volatility. If we repeat the 1979 pattern and get a 35 to 40% pump in February, that puts silver at roughly $150 to $160. $150 to $160. That is not a number I am pulling from thin air. That is the mathematical result of applying the 1979 pattern to current prices. At those levels, the monthly RSI would be extremely overbought. Every momentum indicator would be screaming warning signals. Sentiment would be at maximum euphoria. Magazine covers would feature silver. Your Uber driver would be telling you to buy silver. Historically, that is exactly when tops form, when everyone is bullish, when nobody can imagine prices going down, when buying seems like the easiest decision in the world, when selling seems like insanity. If we reach 150 to 160, I believe that is the zone to watch very carefully. That could be the top of this parabolic phase. Not necessarily the top of the entire bull market, but the top of this particular move. A top that could take years to recover from, just like 1980. Now let me talk about the downside. What if I am wrong? What if we get the 1974 outcome instead? What if silver corrects sharply from here? Based on current market structure and historical patterns, I believe the floor for silver in a worst-case scenario is around $70. I want to be very clear about this. Forget about $30 silver. Forget about $40 silver. Those prices are gone. They are not coming back. The floor has been permanently raised. Even in the most bearish scenario, even if everything goes wrong, even if we get a multi-year consolidation, I do not see silver going below $70. So you now have the approximate range. Upside potential, $150 to $160. Downside risk, $70 in the worst case. That is actionable information. That gives you parameters for making decisions. Now let me talk about something more important than any price level, the psychology of what we are experiencing. Right now the market is volatile. We have seen multiple days with 10 to 15% swings. Up 12% Monday morning, down 10% Monday afternoon, up again Tuesday, down again Wednesday. This volatility is not a bug. It is a feature of parabolic moves. When price pumps this hard, this fast, you get violent corrections. Big institutions are selling into strength. Retail traders are buying the top. Leverage positions are getting liquidated. Stop losses are getting triggered in both directions. This creates cascading effects. Liquidations triggering more liquidations. Panic selling triggering more panic selling. Short squeezes triggering more buying. The volatility feeds on itself. And here's what happens to most retail investors during these periods. They buy when price is going up because they do not want to miss out. FOMO takes over. They buy near the top. Then price crashes. They panic. They sell at the bottom. They cannot take the pain anymore. They sell. Then price recovers and makes new highs. They feel stupid for selling. They buy again near the new top. Then it crashes again. They panic again. They sell again. Buy high, sell low, buy high, sell low. Repeat until broke. This is how wealth gets transferred from emotional investors to patient ones. Every single cycle, every single time, without fail. Your fear pumps the market. Your greed crashes it. I want you to really understand this. Read it again. Internalize it. When you are scared, you sell. Your selling creates buying opportunities for smart money. When you are greedy, you buy at the top. Your buying gives smart money the exit liquidity they need. You are the product. Your emotions are being harvested for profit. The only way to break this cycle is to have a plan before the volatility happens. Know what you will do in different scenarios. Know your buy levels. Know your sell levels. Know how much volatility you can stomach without making emotional decisions. If you do not have a plan, you will become exit liquidity for someone who does. Let me give you practical guidance based on everything we have discussed. If you are holding physical silver, think long term. Physical silver is not a trading vehicle. It is wealth preservation over decades. The daily volatility does not matter to you. Whether we get the 1979 outcome or the 1974 outcome, physical silver holders will be fine in the long run. It just might take patience. If you are trading silver actively, this is the most dangerous time. Volatility will liquidate accounts. Leverage positions will get wiped. If you cannot handle 30 to 40% drawdowns without panicking or getting margin called, you should not be trading this market right now. If you are looking to take profits, the 150 to 160 zone is where I would start scaling out. Take some money off the table. Protect your gains. You can always buy back lower if we get a significant correction. There is no shame in taking profits. Nobody ever went broke taking profits. If you are looking to buy, be patient. If we get the 1979 outcome, there will be a crash after the top with much better buying opportunities. If we get the 1974 outcome, there will be years of consolidation with plenty of chances to accumulate. Either way, chasing here at these levels carries significant risk. If you have no position and are wondering what to do, start small. Do not go all in at these levels. Accumulate gradually, dollar cost average over time. Do not let FOMO drive your decisions. FOMO is how retail loses money. Now, there are three types of people watching this video right now. The first type will do nothing with this information. They will think this was interesting, close the video, and go back to checking prices every 5 minutes. They will get emotional at the worst possible times. They will buy high and sell low. They will eventually give up on silver entirely and miss the long-term gains. The second type will get overwhelmed. Too much information, too many scenarios, 1974 or 1979. What if neither happens? They will freeze, unable to make any decision, paralyzed by analysis, watching from the sidelines as the market moves without them. The third type will use this information to build a plan. They will understand the two possible outcomes. They will have levels they are watching. They will know what they will do if we pump to 160. They will know what they will do if we crash to 70. They will not be surprised by anything because they have already thought through the scenarios. Which type are you? Let me summarize what we covered today. Silver gaining 65% in a single month has only happened 3 times in the last 52 years. February 1974, December 1979, and January 2026. After December 1979, silver pumped another 35 to 40% in January, then crashed and made a top that lasted 45 years. After February 1974, silver consolidated for 5 years before eventually going higher. If we repeat the 1979 pattern and get a 35 to 40% pump in February, silver could reach $150 to $160. That would be the zone to watch for potential topping action. $70 is the floor in a worst-case scenario. $30 to $40 silver is not coming back. I believe the 1979 outcome is more likely, but I could be wrong. Nobody knows the future with certainty. Now, I want you to do something. Drop a comment right now. Tell me which outcome you think we get. 1974 or 1979? I read every single comment, and I genuinely want to know what you think. Also, tell me if you want me to do a similar deep dive on gold. I have extensive historical data on gold patterns that I think would be extremely valuable. Drop the word gold in the comments if you want that analysis next. If you are not subscribed to Finance Currency yet, you are missing critical updates. This pattern is unfolding in real time. I will be tracking it closely over the coming weeks. Subscribe and hit that notification bell so you do not miss the follow-up videos. And if you want to support this channel and help me create more content like this, consider joining as a member. Your support means everything and allows me to spend the time needed to do this level of deep research. Remember what I said at the beginning. In the last 52 years, silver has only done this 3 times. 1974, 1979, and now 2026. Silver just repeated the 1979 pattern exactly. The question is whether February 2026 will repeat January 1980. The next 60 days could define the silver market for the next decade. Stay informed, stay rational, and do not let emotions make your decisions. This is finance currency. Because the real story is never on the surface.